Good morning, everyone. Microphone check, screen check. Looks like everything's working correctly here. Yeah. All right, fantastic. Welcome back to an actual trading week. As far as the trading week is concerned, we kind of had a little bit of a break there with the holiday session and all that fun stuff. But that said, hopefully you did have a really great holiday, and hopefully you're coming back with all your fingers intact and all that fun stuff. But it's always nice to have a little bit of an extended weekend, especially in the summer, where you can kind of, rest up and relax and all that fun stuff. Anyway, as always, before we jump on the right side of the screen there, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that is inside there. Just a quick note for you all before we jump in. Keep in mind that the YouTube broadcast does have between like a 5 and 30 second delay, depending on where you're logging in from. The members one has a little bit of a lesser one, and the VIPs obviously have almost none. But that will definitely impact the timeliness of what you may be talking, or what I may be talking about at the time. Also, I just want to take a second to give a shout out to the latest members that joined overnight, over the weekend, over the extended holiday. Thank you so much for the support. I'm pumped to have you on the SSFTG family. If you aren't a member yet, you do have a few different options available to you to check out if you're looking to further your trading education, your trading career, if you're looking at how we're trading, or if you're just looking for a chat room to hang out with a bunch of like-minded cool people. Here on YouTube, you can check out the join button below the stream. The YouTube family gains access to the extended hours trading room, that's what I was just talking about, which continues the morning session from 10 until things slow down. 10:30, 11 o'clock, 12. I mean, I don't think we've ever had one go that long, but it's usually closer to 10:45, 11 o'clock by the time things wind down. Every member does gain permanent access to the Discord chat server, and of course, you get the awesome badge next to your name here on YouTube to show your support. Plus, it just looks cool. To understand the trading approach and what it is that I'm doing here every day in the room, look no further than the Day Trading Academy. Listen, this isn't like a shallow PDF guide that you're going to finish in an afternoon. You're looking at 19 plus hours of course and study material, including homework, review. I didn't have a chance to do any of the homework, so if you did turn in some homework over the weekend, I apologize. I haven't gotten back. It's been a holiday, so I'll be getting those taken care of today as well. But outside of that, you best tuck in, because it is not a small course by any means, and it's always evolving. And then finally, the big kahuna, the Mac Daddy, the VIP. VIPs have exclusive permanent access to the non-delayed stream, and that covers the entire morning session from 9 until whenever we wrap up. That way you can ensure that you're on the fastest connection possible and you don't miss any beats along the way. Alongside that, VIPs also have access to our monthly VIP webinars, private events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here for the very first time or you're a seasoned VIP veteran over on the Zoom stream, welcome. I'm glad to have you trading alongside of me today, analyzing these psychopathic markets of ours. Let's take a look at some news, take a look at some charts, see what's going on for today so we can be as best prepared as possible. Don't forget to grab your morning DP levels. Those are posted for you this morning on the major 7. NASDAQ, S&P, gold, crude, euro, Bitcoin, and Ethereum. Looking at the news for today, we do have a few things that kind of stand out, but really the only big news announcement is the ISM non-manufacturing PMI that's for June, forecasted at 63.5. We've got some minor news at 9:45, medium news, I guess. Services PMI, market composite, but everybody's going to be watching the ISM. That's going to be the big one. So as far as the news is concerned, well, that's a pretty 10 o'clock, pretty straightforward. Let's get this out of the way here. We're doing a little bit of pregame stuff in the on the VIP side of things. Crude oil is diving hard into this zone here. This is a major zone of interest for buyers to be picking up on this dip. Now, remember, this is a pullback to the previous POC. We need to see some kind of support here, and at the moment, it's just slamming through it. But from a pullback perspective, this is nearly perfect. Very, very nice pullback zone. The concern is, if they go rifling through it, are they actually looking for the larger pullback? Because remember, this trend's been going on since May, okay? So if we bump this out to like a 60-minute, you can see this pullback that we're looking at right now, very, very small. Like this is not a big pullback in the least. If we go back towards the bottom and we drive all the way up to the top, that's going to take a century and a half. Let me redraw this real quick. Something smaller, and then I'll put it on minute. There we go. So bump that over there, bump that to the end. And here we can see where if this isn't going to be the supportive bounce up very far up, where we are right now, basically, if this isn't the supportive zone and that breaks through, then we're very likely going to continue back down to the next area of interest, which would be 73.27. The thing is, right, that's still really far up there. There's been like no pullback on this market, just incredibly bullish rally to the upside on crude. And as we know, with markets that have very little pullback, when they go screaming off the lows and it's just L1, 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 that was an L1. Broke up again, missed it, and now we're starting to pull back. Now, you'll notice what lines up very interestingly right around that deeper pullback. And that's why, you know, I've got a little bit of a concern with the long where it is now. I mean, if it's going to bounce, it'll probably bounce here, and it'll probably give a halfway decent response, maybe 20 to 50 ticks. But realistically, if it's going to really chop through this, there is a much larger area for larger, longer-term swing traders to be waiting for at around that 73.27. Big zone of interest while it pulls back into there. Zooming back a little bit and kind of taking a step back to the index markets real quick, we can see that they're still just excruciatingly detached from the market. The major POC from the bottom in May is down at 13,649. That is a full 1,000 points down, over 1,000 points to the downside. Eventually, we will get a pullback, because it always happens. It feels like the one thing that we're missing, and this is usually a catalyst constantly, is some news to piggyback off of before a large correction, right? And when I say correction, typically that means crash in this type of scenario. The last time we had a crash, it only lasted like 2-3 months, right? It didn't last, I mean, at the longest, maybe a year. It didn't last very long at all. You compare that to the last dive down, the last crash that we had, it's been going up since then. Aside from that little micro pullback, which really, that crash that I'm talking about was really only an L1, L2 pullback in the bigger trend. And now we're continuing all the way back up again. So eventually, we'll likely see that much deeper pullback. But for now, I mean, this thing just keeps screaming to the upside. If we look at the very near term, we can see here again, we've got the same thing, transition off of a higher low. Really strong middle break. It went sideways, really gross, choppy, sloppy for you Elliott Wave folks out there. It's about as picture perfect as you can get for, guess what, leg 5. They're finishing things off. And it makes a lot of sense. Typically when leg 2 or wave 2, for you Elliott Wave folks out there, when wave 2 is quick and decisive, wave 4 is usually really gross. It's doing that too. If we cycle this in a different perspective, if we look at this from a bull's perspective on these cycles, we've got an L2. Well, technically they held an L3. Did they? When did that hit? Yeah, technically. Oh, hang on. Nope, they did hit an L4. Okay, so they barely, but they did get an L4 off of that low. After the L4 rotation up, typically if it's going to be a strong L4, it should have broken above the highs, and that's usually going to be an L1. If it doesn't follow through, then we've got to wait and see. And here we pull back to an L2. I honestly would have expected a 3 because there's some confusion, and then another really aggressive break higher. From that point, it's been L1, not even L1. Maybe if I draw it a little bit better, it might. If it's to the tick, maybe. And we're pulling back again. We bounced off of L1, rotated up to the highs, bounced off of L1 again. You can see what's happening. So we've got a very excruciatingly aggressive L1 trend to the upside that just keeps going. And with this amount of bullishness to the upside, eventually when it does pull back, typically after an L1, 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 L1 kind of exhausts itself, it usually pulls back to L2. And if it's been going on for a long time, sometimes L3. So if we're looking at that from a deeper pullback perspective, that's starting to line up with some heavy pullbacks again. But, you know, as it stands in the near term, we've got a very obvious shelf of support in the 14,675s. They start losing ground, we're probably just going to cycle back into the 14,550s. On the S&P, although doubtable that it's going to pull back that far. Hey, a lot of stuff, how's it going? Doubtable that it's going to pull back that far, but if it does, 42.87 quarter, that's going to be a big zone of interest on the pullback zone to see if they can get a little bit of a dip back into there. That's really about it, though. Same situation otherwise. Although big difference here. The volume, the POC, they're not even close to challenging volume up here. The NASDAQ had a giant mid spike that was starting to build up. But this one, a little bit of a different story. On crude oil, we've got a very strong continuation up. We've already kind of talked about crude. We're breaking through that initial area, which means that we're likely going to be pulling back to 73.27. There's not really much that we can do in this area while it's piercing through this zone and continuing its descent. So next zone is going to be a little bit further down. Just got to wait. Over on the euro, for the most part, the big thing, the big question, the big concern, the big everything that we've been waiting for on the euro is when or if they're going to shift this POC. Let me get this on minutes so that it loads a little faster. There we go. Oh, man, and we can see they haven't. So, I mean, from the perspective of the POC shift and the buyers taking over and everything that needs to happen down here to really shove the market back up, it's just not happening. We can see that there is some decisive volume, and this is a big, thick chunk. This is a thick boy down here. We got some big chunks of volume coming down, a big zone underneath 1.2. Up here is a little bit sharper. We had a big jab and then a little wider inside there. This one's just a wall. With this strong of a breakaway move, I mean, realistically, we've got to be expecting, like, they're going to at least try to get one more leg down, and they did. Now, the concern here is, once they get that new leg down, where does that leg go? Does this end up going, like, full-blown reversal all the way back up, and we're back above 1.2? Or is this just going to be one of those simple kind of ABC pullbacks in this trend in more of a spike and channel, which is kind of what it looks like. Either way, I think it's going to be really difficult for the buyers to take back over unless something drastic happens. At the moment, I have to stick on the sell side, although I will say that the sell side is relatively exhausted at this point. I don't want to go short now. It's a little late to the party, you know, gotta wait. Over on Bitcoin, we've got a halfway decent continuation back up, but the one thing that's just blatantly obvious here, we cannot get out of these previous swings. If we're looking at these last drives, everything is kind of inside of all of them. This one hasn't even made a new high, literally inside. We're in a wedge now. So not only was the market not separating away from these previous pullback zones, but we're also not cracking the top, which is that big caveat. You remember we were talking about how the important part of breaking this high up here, how drastically important that was for the buyers to get that job done. And they did, right? They got the job done. They broke above the highs. There's some obvious concerns when you see resistance coming in here, but look at the way that this is moving. This is very indicative of something where if you were to zoom out to maybe like a 60-minute chart, this is very, actually maybe even a 240-minute. This is what you would expect to see from a bottom. Let me see if I can find another example of one of these in a narrower sense, like right here. Right, you've got this really strong drive to the downside. It looks like there's no way this bear trend is going to end. And then sure enough, higher low, lower high. You get into a wedge, they trap below the lows, and then the thing goes screaming higher like nothing ever happened. So with that kind of momentum, right, take that whole thing and just kind of stretch it out. Right? We've got this big wedge. Now we're starting to see this consolidation. What would make a lot of sense right now, right? I don't know about you, but based on what the market has told us at least, it would make a lot of sense to see them dive, take out this 30,000 mark, and then jump and go absolutely insane to the upside if that's going to be where they hold the bottom. Because that's how bottoms form. Right? That's typically what would take place here if that's going to be the low. Based on repetitions for Bitcoin, the low should be around 30,000 on this next pullback. And if it is, we should see a rally up that could potentially spark all-time highs. Okay, so very big pinnacle area of interest down here in the 30,000s, 30,250s to 100s, because the risk is so small. I mean, what, like $2,500 for 30,000? Yeah, I mean, it's really hard to ask for a better risk reward than that. But that said, the probability, of course, is going to be absolutely garbage. Very unlikely that a probability of a situation like that occurs. But that's fine because the reward drastically overshadows the risk. If I were to take that trade 100 times over and I lost 80 of them, the 20 that win, given that they're 8-to-1 minimum, makes up for it, right? So it compensates for that longer term. in terms of the amount of reward versus risk. You're risking one for, I mean, all the way back up to 60,000 is absolutely insane. So very, very big point of interest here on Bitcoin if it goes just a little further down. As far as Ethereum goes, Ethereum's a little bit stronger, right? We've got that higher low. We've got a very nice little transitional phase, but what we would normally see in a trend, right? Continuation up, break, they don't come back or they retest the previous high, something like that. If we go back and we look at this from a structural, like health-wise move, we've got this drive to the upside and we pull back. Where did that pullback go? Right to the top. Perfect. And another continuation back to the upside. Now, my concern in terms of a very strong leg, right? The strongest of legs, we know how those operate. Leg 1, or wave 1, or however you want to approach it, is usually equal to wave 5, the last part of the move, which means that that third one is 2 times or 1.5 times this one. In a perfect world, right? Now, perfect world, of course, you know, up for debate. But we've got that first leg, and usually you want to see that really extended second leg. And the concern behind that is this all part of, because really this one isn't that much bigger than this one. So the concern is, well, you know, yes, this lines up almost perfectly with a measured move. So from a structural perspective, it matches. Like, it did its job. You know, almost perfectly. It missed it by a fraction. And maybe that's what this last pulse up needs to get done. But once that's done, then what? You know, then it's a possible concern. Things go a little bit different. Very interesting situation we're in here. Crude oil smashing down below that 75.10. Didn't even show a bull bar. Didn't even, nothing. Not a thing there. Let's zoom out a little ways here. Man, I boosted the Discord server, and now we've got like 1.5 million different emotes and things. I tried to do my normal one, and like 700 of them come up. Like, what? Anyway, all right. So as far as the closer picture, obviously, I mean, the daily. I mean, what do you do? You know, what are we supposed to do with this? This thing is just nutso. Let me change these other ones to minute before they give us too many problems. Oops, crap. I didn't want to delete my moving average. Come back. There we go. Okay. So as far as the one big thing that we were talking about before was the upside objectives, the swing traders. They've all gotten their objectives filled, job done. Like, it's all taken care of. The consideration now is looking at this from a wider perspective. There are some there are some similarities here. Looking at this compared to, I don't know, 15-minute chart. I mean, here's the 15-minute chart. That's the daily. Here's the 15. There's the daily. I mean, it's pretty crazy how similar these things are. So in terms of this overall movement to the upside, the one very obvious thing that this does not have, because it was more of a V-bottom crash, is a higher low transition, right? One of those really, really nice type moves. This was a gigantic ABCD correction straight down and then straight back up again. So given that confirmation in the way that this is moving, I mean, looking at it, and keep in mind, this is the low back in 2020 on that drive down. If we're looking at it from a percentage pullback, we come from the top to the bottom. That was not the bottom. Let me try again. Top to bottom, 32.19%. Now, in the DTA, the Academy, you know that lines up almost perfectly with an L2. So if you were to measure from the all-time bottoms all the way up to the top, that was a perfect L2 bounce, almost to the tick. Before a continuation back to the upside. Now, with this rally back to the upside and that massive bounce, and I don't think I can go any further back on Ninja. I think they limit me to 2 years. If we want to go back further than that, we can go back on TradingView. But from this perspective, this is obviously overextended. Like, overextension is an understatement as to what this monstrosity is. This continuation that we've got going to the upside is in desperate need of that pullback. But like we've been talking about, with these trapped POCs, with these shifts that have been happening, even if we go all the way down from the bottom up here, it'll still take a minute for that to load. But if we're looking at these areas, hang on a second. I almost goofed. Let me make this a minute. That really would have taken a century and a half. Let's go back over here. Oh, gotta wait for it to load first. So this is where things get very, very interesting on the NASDAQ in terms of this just incredible rally to the upside. The last time we left the top-weighted POC up, we got stuck around there for a little while, and then just ludicrous mode screamed above it. Market pulled back, couldn't even hit it. Bounced back up. Now, if we continue a little bit further forward, and we get a bit more price action in here, because this was a very wide corrective phase, we can see that the POC did not shift up in time for them to exit. If we go just a little bit further forward on that quick little trap to the high and the dive down, sometimes they'll shift it on those little inside moves like that. So let's see what they did. You know, I moved it 2 candles. You wouldn't think it'd take that long. All right, let's go up to the next high and see. Have these traders been given a chance at all to get out of break even? There's another one. They finally shift the POC back to the upside. They did eventually do it over there, huh? But here again, it missed it. The last time that happened, that rally up was from the low down here at 10,620 to the high. It was a 30% rally. So, I mean, obviously this is much, much later in the trend. And the most recent high was just starting to break out, really not by much, started pulling back, etc. But if we drag this all the way to the end and we see what's going on here, we can see. They missed it. Gone. 12,835. What do we have? Gigantic parabolic rally to the upside. What happened the last time we saw a breakaway move away from a POC with a giant parabolic rally? It came crashing back down to it. Hard. Right? That was over here. And then it missed it and went 30% to the upside. So with this rally to the upside, obviously, I am on edge. I do not like it up here, said Sam I am. I do not like it. It freaks me out, right? It's too far up here. It's way too expensive. If traders are long, which they should be, realistically, given the bigger picture, a lot of traders are likely not buying more up here. They're piecing out of their earlier positions. And when it pulls back, they don't want to buy too much because their average is probably still back here from the crash, or maybe even back here. When you buy more, then it just sucks your average up closer to the high. So you're left in this kind of paralyzed state of not being able to do anything really until something happens. Then we come into today. We are in that parabolic rally to the upside. We are in the middle of that parabolic rally to the upside. I have to assume that as long as we continue this parabolic rally to the upside, we're going to keep rushing the highs very, very aggressively. Until a bear day shows up with some substance that starts pulling back with a little bit more aggression, a little bit more fear, a little bit more to it, right? A little meat. We haven't had that yet. The last major pullback, if we look on that daily chart, I won't pull it up again, but if you look at that last pullback, that quick flush down to the POC, that was a 14.4% drop. So if we look at the current price, 14,746 minus 14%, that would be $2,000 drop. That would put the NASDAQ roughly 12,700s. So, I mean, you can definitively see why I've been talking about this every day and why I've been very nervous about where the market is on these incredible rally highs, because there are some definitive problems with these monstrous rally highs. But it keeps going. So we got to keep going with it or we're just not going to have any trades. Looking at the 60-minute chart, and zooming in a little bit closer, from the 60-minute perspective, we can see that we've already achieved a major doubling up of the POC. That job's done. We did have a massive amount of volume coming in here, but not enough to shift the POC to the upside. They're still stuck down at 13,649. At least over here, we've got that very obvious higher low transition, right? It's a bit nicer looking over here than the S&P as an example, but either way, the 60-minute chart's looking okay. And then over on the 15, we've already kind of talked about the 15, but I mean, I guess if the market is going to pull back, a major zone of interest would be back down to those 50s, the 550s, 14, 550, 40. I mean, that was the POC exactly. So, man, this thing's way up here. We've got the open right around the corner. Hey, how's it going? Welcome, welcome everyone. We've got 3.5 minutes until the open. And we'll see what they want to do. All things considered, looking at the bigger picture and kind of seeing what's been going on here, obviously this is, man, this thing is just absolutely nutso mode to the upside. We could be off to the races again for another perpetual rally to the upside. It's insane. They made that quick little new low. That low was off of an L3, which at minimum is what's needed. Continuation off an L3, L1, L1, almost an L2. Another L1, another L1, another L1, another L1, another L1. So, I mean, if the market's going to pull back, realistically, L1's a pretty hot spot, huh? But if it is going to dip lower, like we talk about, the next one down, they ladder step their way down. L2 would be next. Currently, that's not until the 725s. Got a bit of time. POC is top weighted. That's a toughie. Whoops. Well, I mean, I guess it doesn't really matter. The whole thing's across there. We're retesting that 740 POC. Possibly, maybe, trying to buy off of it. Opens right around the corner. That makes that just a bit awkward. But the fact that it flushed down to that at 928 is kind of interesting. Like, well, wait, why did they flush down to there right before the open at 928, you know? There's no such thing as coincidences. Not in the market. And then just a heads up, since we do have a decent amount of people here, I am going to be doing, I'm going to start doing the drawings for those giveaways, one at a time, while we're kind of creeping our way up towards the 2,000 subscriber mark. So while we're working our way up there, I'm going to start doing the giveaways. I'd like to record one of those videos today, if possible, if I'm able to. So keep your eyes open on the YouTube feed. Those giveaways will start, they'll be starting to come out soon. And, little piece by piece. That way we can do, we can spread it out a little more. Is it a triple wedge on the NASDAQ? Basically. It's a wedge into another wedge that might have a wedge inside of it. I mean, this is nuts. I mean, look at this thing. It's just straight up. I mean, again, in hindsight, like last week, I should have just bought all of them and just never exited. just hold every contract I bought all last week. I would have been hunky-dory. Don't get caught up in the shoulda wouldas. I'm joking about it, obviously, but this bull trend is just psychotic. Yeah, Steve, let's get after the open, and depending on what's going on in the open, because we do have a top-weighted POC already, I'll jump back to that for you real quick, if there's a chance, definitely. Oof, we're back above the POC. We already tested it. They did it right before the open. Again, no such thing as coincidences. That seems a bit opportune. Yep, there they go. So that could be a clue that a lot of those sellers got out at break even. They, right before the open, they slapped the market button with probably double up in size. I mean, look at where I guess if you go back, there would have been a POC here. There would have been... Nope. The only other one was right here. So the POC was here, and right before the open, they slap it? It seems a little bit interesting in terms of timing, don't you think? Yeah, look at the follow-through. I mean, the follow-through tells you. I'm still not going to place a trade at 928 in 30 seconds. But from a context perspective, it's good to know that we're at least on the right side of the psychological battle, right? We have an understanding as to what's happening, even if we didn't participate. It helps a lot in terms of confidence, which makes having to pull the trigger later a lot easier. All right, we are obviously detached away from that. I can't do anything up here. Here's gold real quick for you. As far as the gold movement is concerned, we do have that bounce back above the POC, and that was the big challenge. We were talking about how if the market slams underneath this and they take it lower, it's game over, right? It's over. They did not. It was a higher low, into a higher low, into a higher low, into a break above the POC, and another higher low. Nothing but higher lows, all the way back up. So with that amount of movement to the upside, it's safe to assume that there are a lot of buyers who have their averages down here at 78. The POC was up at the top. If we look between those two volume nodes and look at the size of them, and let's creep this forward just a bit so we can see it better. That might have been an incredible mistake. Give that half a century to load up here. There we go. We can see that this POC and this POC, that is certainly not twice the size. So it was likely just a one-to-one type of build where they're in, it didn't work, they get in again. That puts their break-evens where? Right between the middle. Entry point there, break even, right in the middle. Where's 2-to-1 based off of actual risk, off of the POC at the bottom? Right in the middle. Now, here's the thing. Right? This is a wide open door. And if the market's going to go ripping through this area, this is the spot that it's going to do it. So if it does not stop here, then it's probably going to rally much more aggressively up towards those 1900s. If it stalls here, that doesn't mean the trend is over or the reversal has failed. It's more likely that they're coming back to retest the POC. And given that it's a zone, it could be a little wide. Remember, most good reversals happen off of nice, obvious, higher low transitions, really obvious stuff. It hasn't had that at all. Not an ounce of it. So, market's working its way back down. Yeah, definitely, no problem. Where was that? 73.27. I always do that the wrong way. All right, let's see what they want to get going here. So far, we've had a breakaway move away from the POC, and every time we've seen that on the NASDAQ, it ends up diving back down. And if it's going to bounce, it usually V-bottoms off of that low. There's a lot of usualies that are still waiting for some proof. My concern is, again, this whole trend kicked off with an L3, and it's at all-time highs. We know how the market kind of responds up here. It's a bit nasty. 50,000 or 50, geez. Come back in 10 years maybe. 15,000 rather, right around the corner. Major psychological level. Look at that first 5-minute bar in the S&P. Holy crap. Now that's how you plot a candle. Jeez. First 5-minute bar. It is an inside candle. It's inside the previous day, and it's an inside gap up barely, with a huge bear bar to kick things off. As far as the S&P is concerned, the first 5-minute bull bar has just a dead obvious POC, 762.50. Right above the close of that first candle. That doesn't help. Pullback is much, 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 much more likely. Trying to figure out like where we are in this trend. Obviously, looking back on this move, this is a fairly obvious ABCD correction down. I mean, almost perfect, like literally 1-to-1, 1.91. Like, I mean, it's right there. It is almost perfect in terms of an ABCD move that's up and down. They're all measured out. Which, again, would lead me to believe that this is potentially the start of a new trend. But do I want to enter now? That's the obvious issue. So a deeper pullback makes a lot of sense. They might not get one. We know that this is a perpetual, massive bullish trend to the upside. If they're showing us that they're not going to pull back, it's either hit the gas pedal or step aside. I don't even know where the pullback for this thing would be. This is all just higher lows. They're trying to get something going here. Bears continuing to slide on the S&P. Slapped around a little bit there. Yeah, that's the other thought. The question is this exhaustion? And that's the problem with the trend that's been going on like this for this long, even in the short term. Really, really tough to want to be a buyer this far up. But again, remember, the market doesn't care what you feel. Doesn't matter if it's uncomfortable, especially if it just keeps going higher. Mostly just sideways, no POC shifts, no pullbacks, nothing like that. Let's see if that bull bar might change things a little bit. I was going to say, if they want to get like an ABCD pullback, how does that line up with that POC down there? Right now it's terrible because a 1-to-1 move would put it basically just at the low, 55. That's a heck of a bear bar. Yikes. Let's see how they respond to that. That bear bar is nasty. Bitcoin's so choppy, I don't know how to trade it anymore. Yeah, seriously. I mean, the big thing that at least for me, that I've noticed with Bitcoin is a lot of it is just over the last few months, it's try to buy as low as possible. And when you get a solid, like, 1 or 2 legs to the upside, you're better off just taking a little bit off and then waiting for the next dip. The problem is eventually you're going to take everything off and then it's going to run without. So obviously taking everything off isn't necessarily an option. But like this whole move has been really, really just kind of gross, especially when you look even faster. I'm not going to look at the Coinbase one, but if we look at, where did my TradingView go? There it is. If you look at TradingView and you look at Bitcoin, where we do actually have some volume coming in, and we look at the 1 minute. I mean, look at this thing. It's just you again, buy low is about the only thing that really, that I've at least noticed that's been working. And you wait for a good 1 to 2 legs to the upside. You buy low, you wait for a couple legs to the upside, and it's off. Starts pulling back down a little bit, try to buy underneath some major swings, and if it doesn't work out immediately, wait for those couple drives up and then exit out. You get another dive down. I mean, again, I know in hindsight it's super easy to say, oh yeah, just do this next time. But looking at it from a realistic standpoint, if we look at this drive down, this looked like they were trying to get a cup and handle. It really did. And then it drove back down to another new low. If we encompass this whole thing down from top to bottom, we can see that they didn't really get the job done. They might have shifted the POC here, and the bulls tried there. They failed miserably there. Bulls tried getting the POC shift back to the upside. We separated away. Where did the market pull back to? Again, it's just trying to buy the dip and trying to buy as low as you can. And if it doesn't, if it doesn't hold there, exiting quickly, because those dives down are nasty. They'll rip your face off. It's ridiculous, these pullbacks lately. So, I mean, unfortunately, a lot of Bitcoin and Ethereum and all of crypto, until they start picking up volume again, is just kind of a waiting game. Actually, I've got to move this over onto this. There we go. See if we can get a little bit of a drive down. The sellers are trying to get under the POC now. If we're looking at this from the near term, they're trying to get back above. So this is the seller's chance. This is their shot. Where are they likely going to go? To the earlier pullback. If you go to the impulse POC, that's back here. Now you can see there is a volume zone, so I'm not necessarily expecting that whole that level exactly, but somewhere around there would be the zone if it is going to pull back. $9.45 around the corner. No trades yet. Although it's starting to get interesting. That was a lot of bullishness that crept up inside there. We haven't shifted yet or anything like that, but we are seeing signs that buyers are at least starting to pick away the low. Look at that volume that popped up. Stands out like a sore thumb. All right, well. The picture-perfect ABCD is here. Bulls are still trying, but unsuccessfully. There we go. I'm going to look to grab one down here. I like this area. It's a bit early, and I'm going to keep my sizing a touch small, but I like this for a reversal back up to retest the breakpoint that we just snapped out of in the 57s. And if they do carry down a little bit lower, the next zone's obviously the 740s. But this area is really tough to not like right now. Some of the other markets, while we're just kind of hanging out. crude oil still has another, like, $1 to go. Oh, man, we got a ways to go on crude. That 15-minute candle on S&P, holy crap. Whoop. Jeez, I didn't even see that dive to the downside. Hang on. I love this spot. I'm going to reduce the first one at a loss, which is basically also marking where my break even is for the secondary entry. We didn't get that follow through, and I would much rather just operate with an average that's farther down here. There we go. I'll take the second one off to compensate for the first portion's loss, and then we'll look to follow this last one through back up towards, like, the 55s would be the beneficial area. But if it is going to hold off of this, we should be able to see more follow through to keep this thing going. Trailing up, testing Euro session. 52s, see if they can break through. Keep going now. Very nice pop. 53, oh, tapped out at 53.25. I tried trailing that last one all the way back up. I didn't want to follow through. Beautiful bounce. Yeah, effectively between the first two, the way that one worked out is that the first one, first in, first out, was a loss. The second one was basically to compensate for that. Those two were the break-evens. Remember, the break-even point was kind of right in the middle there. And then this last one was the actual trade that finally fired off. So, oh, sure, yeah, now they jump up. After they took my stop out by 3 ticks. All right, more continuation back to the upside. They're obviously going to have some difficulty at the 763s. If there's going to be a response in the 763s, then, I mean, I don't think it would be that much of a surprise, really. That's the POC that they left behind. We bounced almost perfectly off of the previous left behind POC. 763s were here. Can they crack them? Maybe. Maybe not. Market attempting to push back up. Not only is the POC to this down move at 763, but the first 5 is at 62.50. Makes it a bit awkward. Pulling back a little bit here. The concern would be obviously that the bulls were buying in at the 14.763s. They realize they're wrong and they start exiting at break evens. That would explain this rejection at 763. So it's kind of got to get above it. Finish the job. And 762 is the modified POC of the entire rally. They tried challenging it, but they couldn't quite finish it. Lots of bulls coming in. More continuation back up, breaking beyond that POC. Got 10 o'clock news right around the corner here at, well, a little over 10 minutes yet. POC shifting more, just kind of jumping around here. A lot of these areas have similar volume, so it's not a huge surprise. Check in on some of these other markets. Nothing really happening yet. Crude's got a way to go. There's a lot of bullish pressure coming up here. More continuation to the upside. Buyers may even try to show up underneath that previous bull bar to try to pop it back up. It'd also be a retest of the POC. That'd be the zone of interest if they're going to try to catch a quick little inside push. Otherwise, we've got some falling resistance. We got room yet. There's still some space. It would be nice to see them challenge like the 58s, though. Gotta say. I'm kind of hoping they slip through the 63s just a little bit. Just a little pulse down is all it needs. They're trying to re-challenge the 763s. I canceled that one really quick. I hit buy, but I noticed that my limit was not down by that wedge, so I canceled it really fast here. There we go. Nice little dip under. Stop zone for all of the earlier traders. In the 55s or so. What a terrible bear bar. That's the bear bar attempt to try to drive the market down. This pulse back up is either going to be the bulls giving up or the bulls really pummeling the bears in the face. So this trigger to the downside is going to be, and the follow through, is what's going to tell a lot of the story. The bears had a bull bar response, but the bulls never showed up after that bull bar. We've got another bear pulse to the downside. This is like the first time a low actually showed up. So if the market does want to slide off, you can see the concern and why I'm keeping the sizing a bit smaller. Because if it does want to pulse, I'm not necessarily looking for it to stop in the 740s. It's more likely that we stop a little bit further down next. So I want to make sure that I leave myself some flexibility. Now, if this catches a quick jump back to the upside, and we've really got to pay attention to the time and sales, that's going to be the area of interest to really see how they want to respond to this. That's that quick pulse to the upside, and all I saw were sell orders on that drive up. I'm going to reduce a little bit while the risk is still small. Again, increasing my flexibility. So that way, if it does dive down, it's going to be significantly easier for me to do something with my average. Got 5 minutes until the news. Although, I mean, day after a holiday, how much is the news actually going to do? Can't say that I'm too impressed by it. I think we're just going to get a couple higher lows and rotate back up to a new high a day. See there again, when it popped up, it was nothing but sell orders. That's why I wanted to reduce. I still like the long, but it doesn't matter what I like. I've got to pay attention to what the market's telling me. Now, if the bears are going to succeed here and they drive underneath this low, again, there's a chance that we could see this drive down to the lows of this wedge. Depending on when it hits, it could also line up over here. So understand the risks by still continuing to hold. Holy 30 ES orders on that time in sales. The time, I mean, sometimes you'll get some pretty heavy size on the Nasdaq here and there. The S&P will sometimes light up as well. Usually, I mean, you'll be able to see the S&P hit. Remember back in the day when it used to be able to trade 50s and 100s without a problem? If the market does just jump all the way back up to the upside, obviously I've got to be a bit realistic here. If I'm going for a 2-to-1 target, a 2-to-1 target is above the highs. So this doesn't fit what I'm trying to do. If I were to try to get a 2-to-1, I need more work done on my average in order for that to be applicable. At this point in time, I am nothing more than a scalper, which means that I've got to go for about a half, which fits inside the POC. So it's perfect. Up in the, the 60s to 63s in there. It doesn't have to be perfect, but maybe one day, yeah, I know, right? A few years from now when the market goes back to sleep and it goes sideways and thousands of orders hit again. Honestly, I don't know that situation will ever arise. Given like program trading and algos and everything, the efficiency is just so high. Being able to fill thousands of orders in seconds, that's no big deal, That's why it's just singles all over the place. Every once in a while you get these big bulk block ones, but fewer and farther between, that's for sure. 10 o'clock news right around the corner here. Getting a nice drive to the upside. Seeing if they can get that higher low completion back up towards the mid-60s. Still not really much of anything. No POC changes. Not really anything from that front. 10 o'clock news. Doesn't look like it's really doing much. Just because news is here, I'll float an order up around that POC if it wants to jump. Like that. Oh, God, I got a terrible fill. I dropped the limit order on price, but man, I got a bad fill on that. All right, well, we are dealing with news anyway, I guess. Comes with the territory. Basically, that trade ended up being about break even because of that bad fill after commissions and all that fun stuff. I just really wasn't... what it really comes down to in this one, I just didn't have a chance to really do much work on my average. I was looking to buy way down here, so I was keeping my position sizing light. And then the thing rolls with a higher low, which is what I wanted to see. But, oh well. All right, well, we are past 10 o'clock. I think I got all the morning questions taken care of. So far, so good. Pretty solid morning, all things considered. Had a halfway decent trade to start the gate off, and then the second one mostly break even. Kind of ended up right back where we were. Let's transition over into the VIP session, over into the extended session, and yeah, we'll go from there. If I missed any questions on this side of things for YouTube, feel free to shoot me an email, jhb@ssftg.com. I'll get those covered for you from there. Otherwise, though, enjoy the rest of the day. I hope you had a fantastic trading day, and we will see you all tomorrow, right? Enjoy, rest up. We'll talk to y'all then. For the rest of you, I'll see you in a couple minutes. You can listen to me talk to myself. Thanks. Bye.